Ladies and gentlemen, good day and welcome to the Saregama India Q1 FY23 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Bhupendra Tiwari. Thank you, and over to you, sir.
Thank you, Seema. On behalf of ICICI Securities, we welcome you all to Q1 FY23 results conference call of Saregama India. From the management, we have Mr. Vikram Mehra, who is Managing Director, Mr. Pankaj Chaturvedi, who is CFO, and Mr. Pankaj Kedia, who is Vice President Investor Relations. So without much ado, I'll hand over to Vikram. Over to you, Vikram.
Thank you, Bhupendra. Good evening, everyone. Quarter one of financial year 23 saw our operating revenues of around 169 crore and a PAT of 41 crore, which actually results into around 61% year-on-year increase in our operating income and 52% increase in our PAT income on a year-on-year basis, something we are very, very proud of. Keep in mind, this is in continuation with our last year numbers, which had seen a 31% increase in operating revenue and a 35% increase in PAT. I know I sound repetitive, but I'll again say this. This is not an aberration. Quarter after quarter, you're seeing Saregama's results. They are always moving in action. These are steps that are nothing but milestones in Saregama's resurgence story. We started rebuilding the foundation of the company between 2015 to 2018, and what you see now is the growth in this beautiful building called Saregama that we people have made. A company which not only thrives on the richest IP catalog that it owns, but also a company which is building the IP for tomorrow. So the 30 and 40 years down the line, so Saregama will continue being the #1 IP company of India. Our operating income before content charge, interest and depreciation was at 64.7 crore, which means a 54% growth compared to last year. As you know, right now our business is broadly divided into 3 verticals. The most important vertical, which is music business, that grew by 38% on a year-on-year basis in this quarter. Now this is significant. Maybe better than most other music labels in India or globally have reported. We grew by 38% on a year-on-year basis as far as music business is concerned. This comprised both of the licensing as well as the Carvaan business. Let me start with licensing. We have been growing at over 20% on an annual basis for now over 3 years. This is the 4th year going on, and I'm very happy that the growth story continues. During this quarter, we released all the songs of the super hits movie of Mahesh Babu called Sarkaru Vari Pati Pe Pata. I'm happy to share that the cumulative audio and video views and streams that we have on the Saregama's official channel for this movie have crossed 550 million, and this movie was released in the month of April only. It shows multiple things. One, we are picking the right content, and then we are putting the right marketing muscle to go out there and make this content really big. And it's not just only large movies that we're picking up. We in fact released another small film called Ittu Si Baat, and the great thing about that film was that it had songs from Arijit Singh, Zubin Nautiyal, Vishal Mishra, the who's who of the music industry were part of the smaller films. Our film buying, our music buying is not just based on picking up tentpole properties. A lot of thinking goes right now on the back of data modeling to tell us that which of the large, medium and small size films, music that we should pick up. And the success is there in front of everyone. We continued also our investments in Bhojpuri, Gujarati, Telugu, Malayalam, Tamil, Bengali and devotional music. I think a song that stands out completely during this quarter, which I like to mention, is a Bhojpuri song called Nathunia by Kesari Lal Yadav. That song in this short duration of 3 months has already crossed 150 million YouTube views. Now this is a massive benchmark for a language which is not the primary language of this country. Bhojpuri is spoken by a large belt in North and Eastern India, and their last song in that language getting 150 million is a big achievement, which also revalidates the fact that we are the #1 guys now in Bhojpuri and Gujarati. The strategy of investing in new content is clearly paying off. All the financial numbers I'm sharing with you right now are a testament to that. It's not only allowing us to grow our share in the new content category space, but in fact is also helping the growth of catalog. Because remember, people who start following Saregama's social media accounts, YouTube accounts, Facebook accounts, on account of the new content or of sampling a lot of hits of Lada Didi or Kishore Da on our channel. We had raised 750 crore with an explicit mandate to invest in new music content, and we are completely on track. As mentioned, we are using data mining and predictive models to decide what content to invest in. Many of the films whose music that we people have acquired over the last 6 months, they hopefully will start getting released from the fourth quarter of this year, and a large number may be financial year 23-24. Some of them are Karan Johar's next directorial film, Rocky Rani Ki Prem Kahani. There's another Dharma film that we people have picked up called Rola. There's a Vicky Kaushal, Sara Ali's next film with Medoc. Chiranjeevi film, which is also has Salman Khan's songs in it, called Godfather. It's a Telugu film. Prithviraj Sukumar, who's a Malayalam superstar, his next movie Kappa. Amy Virk, who is Punjabi superstar, his next film Oye Makna. There's a lot of content that we people have picked up, and these are just some names. The list is very long across film music in Hindi, Tamil, Telugu, Malayalam, and now also Kannada and Punjabi. While the company started investing in new content from 2017 onwards, that's the time we started doing experiments at a small level. The real growth that we are looking at is this becomes serious from this year onwards. It's now that we believe with the fundraise that music acquisition is going to see a significant step jump. That is its implications. Done over the last many months is to reassess our capabilities on multiple fronts. On the content acquisition side, we have gone out there and reinforced the teams in each of the languages, so that people sitting in Bombay are not taking decisions on account of what content to acquire in a Bengali language or the language. It's a strong teams which are deciding on those markets whose mother tongue is that language, who are taking the calls on what content to pick up. The head office gets involved only from the data analytics perspective, giving them enough ammunition about the past track record of the artists whose music we are picking up. So a lot of work happening there on building that team, building a data analytics capability, and also marketing relationships all across. Partnership with radio channels, partnership with TV channels, partnership with digital platforms, partnership with social media influencers. All that work is going on right now. If we need to have the largest share of new content, we should equally be equipped at marketing and monetizing that content in a very effective fashion. As part of this study, another thing we noticed was this entire useful life of the new music content that we were acquiring. We have been sharing with you guys now for many quarters how the music that we people acquired in 1960s, 70s, 80s, all of them are still growing at a significant pace. It's not that revenues have started at all. And hence we started questioning our current definition of the useful life of music, which up till now management assessment was 6 years. The question that was asked is right assessment of the useful life of that asset. We asked Ernst & Young ANY to do a benchmarking of how all the global music labels are defining the useful life of their music assets. The report has come to us which defines that almost every major label of the world has useful life definition between 10 to 25 years of the music that they're acquiring. Which is fair. Please remember the life of music as proved by Saregama's own older assets is much longer. the useful life that we had defined of 6 years. Basis our own data and the global benchmarking, the management team is recommending that we should change the useful life of our music assets from 6 years to 10 years. But unlike the global labels who follow a straight line method, we are recommending a more conservative approach whereby there is a higher amortization happening in the first 2 years and then it goes on a straight line method. So to just explain this to you, typically when we are acquiring content, $80 go towards content and $20 go towards marketing. Even with the new useful life of 10 years, the marketing cost is going to be charged off immediately, so no change there. Of the $80, 20% of that will be charged off in year 1, 15 to year 2, and then from year 3 to year 10, 8.1% each. The total impact, and this is an important part for all of you to understand, the total impact of the change of the useful life of our music assets in this quarter has been 1.7 crore positive. That's the only impact it has. This is more, we had made these reassessment of the useful life more to prepare the company, keeping in mind the large investments we will be making in future, and whatever we do has to be in sync with the practical reality where an asset ends up getting monetized for a much longer life than an old assessment of 6 years. Coming to Karma, so Karma saw an upswing in this quarter. We touched 98,000 compared to the 45,000 in quarter 1 last year. And this came entirely out of color. There is no change or shift in our marketing strategy on Karma. We are still playing a passive role and allowing market to generate its own demand. It's the opening of the retail seems to be doing the magic and adding to our growth numbers. In this quarter, we also initiated the test marketing of 2 new variants of Karma. A music bar, which is a sound bar with a karaoke system and a mobile phone. This was done in just the last 10 days of June. It's still very, very early days. We will keep on assessing the feedback from the market. We are in the midst of that. Maybe make modifications in the product on customer feedback, and then look at a proper formal launch of these products maybe in quarter 3. We'll keep you updated as we go forward. The good part is that we people are put out in the market are all being manufactured in India, so that we are not overtly dependent on supply chains emanating out of China. Want to reiterate, there is no marketing push that is quarter 2 on any of these products. This was a slow quarter for Udly. It typically happens right now. The films and series come out in blocks. Last year also everything came out in quarter 4. You will find something, most of the Udly releases are going to happen in quarter 3 and quarter 4. The TV serial business continued its steady performance in terms of TRPs. All the 3 programs have delivered. The only downside we saw this time is that in our significant amount of our revenues that come from the TV business has come on account of advertising, both on Sun TV channel and on YouTube. We saw some amount of there because of slowdown in the advertising revenue. We expect this to be a short-term trend and everything to come back on track the moment festival season starts. This quarter, we finally saw the launch of the new business line of live music. We launched it in partnership with the biggest live music star of this country called Diljit Dosanjh. He is the one music-based artist right now who draws the maximum number of paid tickets in India and abroad. In fact, we did in this quarter completed 6 successful events, 2 in India and in Gurgaon and Jalandhar and 4 Canada. And 4 out of these 6 shows actually went completely houseful. So we are very, very happy with the way this business has started. With time, this business will not only contribute more and more to the top line and bottom line, but also help in our add power to our business in the music acquisition and the creation side. So overall, ladies and gentlemen, a very good quarter for us. significant growth both on the top line and the bottom line, and growth of newer verticals. Music business was the biggest contributor to this growth in this quarter. Take questions from you people.
Thank you, sir. We now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. Anyone who wishes to remove themselves from the question queue may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. We take the first question from the line of Savi Jain from 2.2 Capital. Please go ahead.
Hi, can you hear me?
Yes, please.
Hi. So I just had a couple of questions. One was on the royalty expense. That seems to have fallen both QOQ and YOY. Why is that?
The royalty expense is more on account of the past catalog of past, and it's typically depends the mix because there is some content where there is a royalty expense, and there's a lot of content that we people acquire where there's only a one-time payment. So if the mix changes a bit here and there, this will keep on changing.
It's got nothing to do with that accounting change, right?
No, actually nothing.
Okay. And
Again, repeat right now, what we have done is just change the useful life of our as newer content is concerned. There is no accounting policy change that we're bringing in.
so on the newer content, if you can just again summarize, maybe I missed it. What was it earlier? What did you charge in the first and second year charge of earlier, and what is it now?
So earlier we people had the marketing was earlier also 100% straight away in the month one itself. So there's no change to that 20%. On the remaining 80%, it was 35% in year one, right, and then 13% for the next 5 years. Now what we are seeing is it's 20% in year one, 15% in year two, and then goes to 8% for the next 8 years.
Okay.
It's a very small change right now. I'm saying the net impact of that on our PAT is only 1.7 crore.
But I think a lot of the content charge will be back-ended, so the benefit will come through in the next few quarters. Is that true?
So, yes, see, at the end of the day, this is more to just what we are doing here is because our policies were not in sync with what the global practice. This was done more to with our numbers being open out there after the QIP in the US circuit also. We just wanted to come in sync with the global practices.
Got it. And on this live concert business, can you give a sense of what is the revenue contribution this quarter?
So right now, remember this, I said this in my last quarter call also. It's an early stage. First year is going to be more testing the waters. But in general, events business is a 5 to 10% margin business for the next couple of years. We are running the events business for profitability, but more importantly, to reinforce our position on the music creation and acquisition side, because it's the same bunch of top singers who are also contributing to the biggest songs as well as are active on the live circuit.
Yeah, I understand that, but I mean, like eight events, will that contribute to a few, double-digit in crores in terms of revenues?
Let the year get over right now. Maybe I'll give you a better idea. All I can tell you that it will not be a loss-making thing. That's all comfort I can give you. Obviously, we believe right now it should contribute significantly to the top line. Just the first quarter, first event. Give us 4 quarters and we will be able to go back and share more specific details with you.
Okay. And, the last question is on these YouTube views. There's a significant increase every quarter. Is this to do with user-generated content being a larger part of this growth, or Is it the Saregama channel alone contributing the growth?
As the growth, bigger contributor is the Saregama channel. Though on both we make equal amount of money. It doesn't matter whether you are generating content on Mere Sapno Ki Rani or Pani Pani, or whether Saregama is doing an official upload, because we make the same amount of money. But in reality, growth rate is coming more from our own channels because of the amount of new content that's being put up.
Okay. And lastly, if I may just squeeze in, on that Instagram deal, it was a fixed deal, right? It did not depend on the number of streams that we
talk about specific deals.
No, you had mentioned that it was a fixed deal. I mean,
in general, short format app deals are fixed fee deals.
And it has not come up for renewal yet?
I cannot get into specific deals.
Oh, yeah, I mean, I just wanted to get into, basically, I think this Reels has taken off significantly ever since we signed the deal. And if it was a fixed deal, I mean, do we expect like a significant increase when it comes up for renewal? That was all I wanted to get at. But I appreciate if you don't want to discuss it.
I can't get into specific deals, but please understand, if we are growing at our music licenses over 20% now for over 3 years, and last year we grew it for 26%. This quarter the growth is even more. Clearly it's coming out of and we have both. We have variable deals with minimum guarantees as well as fixed deals. All of them get renegotiated in a very big fashion if the numbers are that significant. And numbers are becoming that significant because we are investing in new content aggressively.
Yeah, got it. And this Ghana thing, is that going to be a negative? Because if it gets acquired by someone, there's news about it getting acquired. So there's consolidation on your customer side. So that will be a slight negative for you, right?
Let me answer this way. I'll not answer specific the brand name that you took, but in general, consolidation doesn't affect us because the customer is going to listen to a song. It doesn't matter to me whether the customer is listening to the song on platform A or platform B. I get paid on an average 10 paisa. It doesn't matter which platform are you going to.
No, if you have minimum guarantee on both the platforms, then you're not hitting your...
I think that you asked the right question. No, we are. The days of we people not hitting a minimum guarantee, they were 6 years back. Now, we people constantly go back. In many of the cases, there are overflows coming in.
Right. Thank you, and congratulations for a good set of numbers.
So let me add further. If you ask me, this is if any of the platform folds, is also a signal to other platforms that they should think towards paid services now. It's high time. And I've been saying this now that it's time that these streaming platforms start making a significant push towards paid subscription. That's going to be great news for their financial viability and also means a lot of money to be made by music IP owners.
Yeah.
So I think it would be a positive news if there's relation that happens.
Yeah, got it. Thank you.
Thank you, Mr. Jain. We take the next question from the line of Saket Menotra from Tusk Investments. Please go ahead, sir.
Yes, Saket.
Mr. Saket, your line is in talk mode, sir. Please go ahead with your question. Mr. Saket, your line is in talk mode, sir. Please go ahead with your question. Sir, I think there is, he's muted his line from his end. We will move to the next question from the line of...
Hi, am I audible?
Yeah, now you're audible, sir. Please go ahead.
Okay. Sorry about that. The first question I have, Vikram, you mentioned this 550 million plus impressions of Sarkari Wara Part 2 from April to August. So this is across YouTube and other apps, or was it just YouTube? Just want to... And
the audio streaming apps. We don't include user-generated content is not part of it, and any of the other short format is not part of it. These are all variable numbers that we get reported on a daily basis. Okay. The second question I had, Vikram, recently we saw this development where Meta announced that they are starting monetization of music on their videos. So, would you like to comment anything on that? Has that gone live for India, or is it just a global announcement that they're going with? I'll not comment on a specific company, but in general, I'll reiterate what I said earlier. Our deals with short format apps, because they were in their infancy, and short format apps are, all these are from a India के अंदर हम बात करें तो from an Instagram to YT Shorts to Josh, Moj, Chingari, all these in general, the deal nature of the deals is a fixed fee deal with a clear understanding that as their business model evolves and get into an advertising driven business, then the fixed fee nature will change. Right now it will become a variable with minimum guarantee. We saw how big that became on a platform like YouTube. We believe the other guys will also go in that direction, which means the platforms will make money as well as the IP owners.
All right. So as of now, there's, it's still in an evolutionary phase, is what I understand.
That's why we all have protected ourselves with fixed fee, but we have, our deals are structured in a fashion that if they move advertising driven stuff and they offer a share of advertising to any label globally, we also end up getting it immediately.
Got it. And any timelines on clarity on the demerger can be expected anytime this financial year?
Pankaj will answer that.
Yes, Saket, Pankaj this side. So we have been resolving all the queries that come from either the stock exchanges or SEBI. Most of them have been done. So during this quarter as well, there were some questions that came in relation to this, and we've done that. We now await the final clearance first from SEBI, post which we will then obviously file our application with the NCLT. We can't put a very specific date, but yes, normally these things do take 6 to 8 months from the time of filing the NCLT. We are pursuing this matter and seeing to it that any kind of questions or any kind of steps that are involved to expedite are being followed upon.
Got it. Thanks a lot. That's it from my side. Thanks.
Okay, sir. Thanks, Saket.
Thanks.
Thank you, sir. We take the next question from the line of Shubham Ajmera from SOIC Investments. Please go ahead, sir.
Yeah, hi. Am I audible?
Yes, sir.
Yes, please.
Yeah. So my first question is regarding the advertisement revenue. So as you mentioned in your opening remarks that we are seeing some trend in the downward trajectory for the YouTube revenue and advertisement. So are we seeing the same trend in the streaming companies as well?
No, so we have not seen that impact hurting us on a music business at all. In fact, it's only that the TV part ke andar our YouTube number is still very, very small. What's hurting and which has hurt us a bit right now is a fall in the advertising revenue and TV channels. Because my South TV serial business runs on advertising running on Sun TV itself.
Okay, got it. So, is there any chance, if you have any idea regarding the slowdown in the revenues for the streaming companies as well?
We don't see our streaming business is not dependent on advertising at all. Streaming business on the free side, we have a protection through a per stream rate, and on the paid side, we get a share of the subscription amount. So in fact, the audio streaming business for us, the way our deals are structured, is actually not dependent on advertising at all.
Okay, got it. And my last question is regarding your plans for the Carvaan for next 3 to 4 years. So, if you can give me some broad idea regarding on the margin side, which we are targeting in the next 3 to 4 years.
Sir, I will talk about these as I stated the day we decide that we will now start investing in Carvaan. The call before that, I'm going to put those numbers in. We are still trying to see, pehle there was a demand issue with retail network shut, then there was massive supply because chips were not available. So things are still getting sorted out because even if we go and manufacture rest of the parts in India, chips are still coming out there from one of these Asian countries only. So we want to first come on top of it. Once we believe that this product is now ready for expansion, then we are going to talk to you about our investment plans and how the financials are going to work out.
Okay, sure. Thank you. Thank you so much.
This time you are not going to find any investment going from our side on Carvaan. It's just moving at this juncture on its own demand.
Understood. Thanks.
Thank you, sir. We take the next question from the line of Vimal Goyal from Alchemy Capital. Please go ahead, sir.
Yeah, thank you for the opportunity, sir. I hope I'm audible.
Yes, please.
I'm not sure if you've answered this, so sorry if I've made you repeat it. If you can just highlight what are the kind of investments that we're seeing in content over the next 1 year, or maybe if you have any long-term guidance, if at all.
Our stated aim is that of all the content that comes out in the market on a pan-India level, we want to pick up anything between 30 to 35% of that market. And the cost of the entire content that is expected to come out this year should be in the range of around 800 crore. So that's the aim that we people have. We don't know whether we'll be able to acquire the entire share in a single go. Even if we acquire, it may so happen that the movie may not get released in this financial year, though the deal happens now. But the movie may get released in next financial year. But broadly, this is the aim.
Okay. So this year possibly you are looking at somewhere near 400 crores of content investment. Would that be a fair assessment, if at all, assuming that the entire you are able to take whatever entire pie that you are looking for?
800 ka 30% is 240.
So
it's
okay.
Literally that space right now. Now this is the first year for a company which had a single-digit share of new content. When it wants to move to a 30 to 35% share, even we have the intent. It may like in Bollywood movies, the music of the film gets sold 12 to 18 months before the movie gets released. So it will take us that much amount of lag right now to go back and build it up. But the space that I said, 200, 220, that kind of space that we will be in.
Understood. Thank you very much, sir. All the best.
Thank you.
Thank you, sir. We take the next question from the line of Bhupendra Tiwari from ICICI Securities. Please go ahead, sir.
Yeah. Hi, Vikram. So my question is basically on the web series and movies part. If you could talk about what is our overall pipeline of things that we are looking to do over the next 12 to 18 months, number of web series lined up, the movies, because I think that piece is getting bigger. And second follow-up to this is, what is our kind of margin profile that we are looking to get there in this segment? Thank you.
So I think margin part I've always stated, I'll repeat this. This is a business right now which is 15 to 20% margin after writing off the entire cost of film or series in year one itself.
Okay.
Right, and we believe that's a range that we will be in. I am not attributing any profit from the second round of licensing that happens typically in this business, because you license on the first round, it may be 3, 5, 7, 11-year license, and then the second round of licensing, the cost is fully written off in year one itself. All that I'm keeping separate. I'm saying year on year, as we people go out there for next 3 to 5 years, the hugely business, film, TV, and web series business will be contributing 15 to 20% margin. In terms of the size of the business, we crossed 100 crore last year, and we believe right now this number should be anywhere between a couple of years, we should be hitting in the range of 150 to 200 crore.
So if you could talk about the web series or the films which are lined up for the next...
I can only tell you right now what has been announced. There is a Sunil Shetty series that is already been licensed out. We will be making the delivery now, and that's when we are going to be going and recognizing the revenue. That should get released sometime this year. There is a Malayalam film with a big star out there called Nivin Pauly, which is, as of now, is expected to release in September. The number 2 star there in Punjabi after Diljit is a guy called Amy Virk. It's him that we people call Oye Makhna, which is expected to release in the month of November. We have also started to shoot with the Malayalam biggest star called Prithviraj Sukumar, which may get released this year, may get released next year. These are things in public domain, but we are working on many more either series concepts and films, but all that information is still not in public domain.
Okay, sure. Thanks a lot. Thanks, Vikram.
Thank you.
Thank you, sir. We take the next question from the line of Gaurav Chopra from Union AMC. Please go ahead with your question, sir.
Hi, sir. Congrats on good set of number. I just had a small question. Going through your annual report, I could see the revenue from India last year grew just by 4% in the music licensing business, while revenue from exports were obviously up 71%. So could you highlight, like, why would that happen? Like, why would India business revenue growth would be just 4%?
Sir, but typically, my understanding is, Pankaj can correct it, many of the deals that we are doing with global guys, right? So, I'll not want to take specific names, but if you think of all the major licensing companies, they're all global companies. So from reality perspective, right now we just license it through a subsidiary.
Okay.
Correct. Yeah. We do have partners who are based out of India. So just from a classification point of view, it could seem as revenues in India and outside India. But overall, basically, and everything remains the same.
Okay.
See, if you ask if we ask a normal Indian, they will, living in Bareilly and Jodhpur, they will say that YouTube is an Indian company. But the reality will be a bit different.
Got it. Thanks for clarification.
Thank you, sir. We take the next question from the line of CA Garvit Goyal from Invest Research. Please go ahead, sir.
Hello. Good evening, sir. Am I audible?
Yes, please.
So my first question is, as NFTs are coming into trend, so how it is going to be an opportunity for us and how it can shape our top line going forward? Any views on that?
So we are very seriously exploring it. We believe NFT is a great way to unlock the value of that we people own. We just want to get our product proposition right, because we believe if we are launching an NFT, it should not be gimmick value. There should be a genuine value being offered to the customer. Then only that business is going to become significant. You will see very soon an announcement coming from our side in this space. So for us, it's a serious business opportunity and not a gimmick.
Okay, understood. Okay, and my second question is, sir, in Q1 financial year 23, music segment seems to be muted. If we are comparing it with the previous quarter, so what are the reasons for the same? Is it due to any downside in the platform revenues like OTT, broadcasting, video streaming, or social media? And how you are seeing it to be in upcoming quarters?
So let's answer the part one first. Please look at our numbers for the 4 quarters for the last 5 years. You will always see Q1 as the lowest quarter. In general, fourth quarter becomes very, very high because a lot of our international publishing revenues hit us only in Q4. A lot of society revenues hit us in Q4, and our policy with these revenues is that we receive them only when the cash hits our account. So Q4 is always on the higher side. Q3 becomes higher typically because of the Carvana sale. That's a festival season. So ask me, we are very, very delighted with the numbers that we're seeing in Q1, because the Q1 has never matched our Q4 revenue ever before. This is the first time Q1 ends up taking a dip. And that's the basic cycle of the music business.
Okay, understood. Means it's better to look year on year.
You have to look in year on year basis, and that's because there is seasonality in our business.
Okay, understood. And what are the developments on the Karma platform side? Basically, you were mentioning in your annual report, we will start getting advertisement type of revenue model also from Karma platform once it gets commissioned. So what are the developments on that side?
Yes, as the new generation Karma is going to come and hit, that's it, Karma, where advertising and ongoing subscription is a thought process we are trying to build it in. We are still some time away. Like I mentioned to somebody else earlier, that whenever we are ready with a product which may need investment from our side, we will first come out there and talk to you. But it's still some time away. Till that time, there are no marketing or manpower investments going on Karma.
Okay, understood. And sir, basically, we are looking for the new acquisitions from the music side. And what is our specific target group when we are acquiring the new music? Are we looking towards targeting a particular age group, or what is our basic approach? Like, see, I am 23, so your focus will be on our side or our parents' side. So that's basically my question.
See, new music will be all talking to your side, and I am the age of your dad. I don't get involved ever in music acquisition. There are younger people under the age of 30, what to buy, what not to buy. We're very particular about it. Nobody senior is listening to music and taking a decision. In fact, we sometimes joke right now that if I like it at my age, that means the song may not work. It's better that at 26 years, they only decide.
Right. Thank you very much, sir. Thank you very much.
Thank you, sir. Ladies and gentlemen, that was the last question for the day. I now hand the conference over to Mr. Vikram Mehra for closing comments. Thank you, sir.
Thank you. We maintain a bullish stance on music licensing. We are projecting a 20 to 23% growth year on year for the next 3 to 5 years. This will happen irrespective of consolidation on the platform side. In fact, if anything, as I said earlier, if there is a consolidation happening, it's good news because that means with less platforms, more and more people will be looking very seriously at the subscription-based business, which is great news for both parties, the platforms as well as the IP owners. The advertising downturn, in fact, the way our deals are structured, I don't think it's going to go back and impact us significantly at all. I think if at all, it will be a marginal impact. We hold on to, in spite of the economic downturn, we hold on to a 22-23% growth rate in music licensing business over the next 3 to 5 years. We'll continue with the investments on content across the multiple languages, both on the film and the non-film side, with the trends being people under the age of 30. We continue with a cautious approach on Carvana. The focus is going to be on margins and not on revenue. The film series and TV business should go out there, keep on growing to 25% growth rate year on year with a margin which is more around 15%. Events vertical will slowly build up in terms of revenue, but in the initial years, we expect it to contribute only 5 to 10% margin. On the business, as a management team, we are very, very bullish. We have built the right foundation, and year after year after year, quarter after quarter, we are proving it to you that the foundation that has been built is strong enough to keep on sustaining the growth rate that we people have shown over the last 3 years. Thanks a lot, gentlemen. Good evening.
Thank you. On behalf of ICICI Securities, that concludes this conference call. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.